In a bit here, I'm going to tell you why HYLD or Hamilton Enhanced U.S. Cover Call ETF is disappointing me. So if we look at today's move, actually it went from 11.15 to 11.25. So this is the lowest in 52 weeks as of today, but it didn't actually hit the lowest that it has hit. If we look at this chart here, we can see this is Yahoo Finance. We look at the chart here is 11/12 September 1st 2022. That's how much it was. That was the lowest point, and today it almost got there. It went all the way from 11.15, so it just missed about 3 cents. It would have gone to the lowest. So at this point, I'd say it hasn't broken that resistance he had last year, but it's at 52-week lowest since October, because if we look at the October 1st, is always been higher than the point that it is today. So hopefully, because we can see the move here, it went back up again, and now it closed at 11.24. So 52-week range is 11.15 to 12.80. Volume is 33 to 60,000. We look at the yield right now, based on what currency they pay, it's about 13.40. A PE ratio, it's 17, so it's pretty much like S&P 500. So for you who are new here and you don't know what HYLD invest in, so HYLD is pretty much one of those we call funds or fund. So it is a Hamilton Enhanced U.S. Covered Call ETF. Objective is a fund seeks to provide attractive monthly income and long-term capital appreciation from diversified multi-sector portfolio of primarily cover call ETF focus on the US. So that's what HYLD is. It does pay monthly, and it comes in two type. You can buy in US dollar if you have US dollar, or if you have Canadian dollar, of course it's HYLD, and the US one is HYLD.U. It's a pretty good fund overall, and we'll look at performance, and the other thing I'm going to show you is the changes that are coming, because right now the construction are these ETF, but I'm going to show in a bit what changes are coming and what made this fund itself actually to be a little bit down here. So if it's your first time, again, this is Mr. Moneyman channel. On this channel I talk about money, investing, and anything related to your finance, and especially this type of cover call ETF. So in order for you to stay in the loop and you don't miss any changes and updates, just make sure you subscribe. And if this video gave you any value, just make sure you hit that like button. So we look at right now, because it's very down, and the reason why it's been dragging, keep going down. So we look at the corporate, what makes this fund to go down. If you look at the if you look here, these are the funds. So we have a JP is 19%, almost 20%. We have JPQ is about 19%. These are all US cover call ETF, and we have, of course, Horizon. This is Canadian one. Horizon Nasdaq 100 cover call ETF is 17. We have Horizon US large cap equity cover call is 17. So we'll look at performance of this, because if these are down, of course they will drag the performance of this ETF. So we'll look at JP right now. We'll look at I just went 1 year because that's when it's down right now. Look, it's down massively. It was all the way from 53 right now is 52.12. So it's down. When you look at JEPQ, it's the only one right now is up, so it's a pretty good. That's a blend. And we look at Horizon QQQC, it's up 1 year. When we look at Horizon US large cap, we look at it's almost flat, but it's up, about 8% this year. We'll look at a global, global X or XYLD, it's way down right now. We look at, so it's about 4%. It's almost flat, but is down. When we look at the Harvest HL, it's down. So we look at this one here is it's up. We look at Global Russell 2000, it's down. So it's kind of blend. That's why right now it's kind of, it's not that. That's what the performance of this hasn't been great, because there's some that have performed a little bit higher, and some of them have performed down. And because this is fund of fund, so whenever happens with those funds, this one I showed you, or if we go to the list here, whatever happens to these ETFs, that will impact the performance of HYLD. So that's one thing you need to understand about HYLD. But if we look at the performance or general when it comes to its performance since inception, look at this. This is kind of disappointing. Performance hasn't performed as as I expected. But HYLD, we look at 1 month as it's -1. We look at the 3 months period is about 3%. -3%. We look at the 6 months period is about 3%. When we look at year to date right now, it's performed well, about 9%. Because of those other ETF like JPQ, because this is up by 11%. So if you blend that one, you blend this one, these are all up. Of course, it has given this a leg up to perform that 9%. If we look at 1 year, it's 19%. But since inception, because there was market crash that happened into last year and also this year, so all together is down about 6%, and that's including dividend that you've received if you are to invest. I mean, so all in all, you're not too down, but still you're down overall. So what changes might come to this? Based on my sources, this, you have to understand this. HYLD is a fund of funds, so meaning it's investing in other ETFs. So that is kind of to reduce the the cost and everything. But if we look at these ETFs right here, we have the JP Morgan equity. This is US dollar, US dominated dollars. Most of these are these US QLDs, US RLDs, US. So in order to reduce the cost, because of course when you do that, you're using a US covered call ETFs. So managers of this, because this is Canadian, it's traded on Toronto Stock Exchange, because you gotta exchange the money to buy, and so there are more cost involved with that. So in order to reduce the cost, so what Hamilton is going to do, what they're going to do is they will, I made a video about the new ETF that came out. So, all these one here, it says Enhanced Covered Call ETF. They are funds of funds. HDIV is Canadian. It invests in Canadian ETFs. This one is American ETFs. So because now we have brand new technology yield maximizer, this is QMax. It invests in American companies. And SMAX also is US equity yield maximizer. But because these funds are in Canadian dominated dollars, because there's already cost involved in those ones whenever they buy those stocks to write a calls. So what they're going to do, they will just use a QMax and SMAX, take those ones, they're going to put in HYLD, and that will reduce costs. So expect sooner or later these there might be some changes here. Either they might add into these ones, or what they're going to do is just to kick some of these out to reduce that cost and to put those QMax and SMAX. So that's all. I just want to give you an update on performance on HYLD. That is 52-week low, and what change may happen, which is they're going to add QMax and SMAX to that one to reduce the cost, and hopefully will kick in performance to make your performance even better. So that's all. If you have any question, you have any comment, just make sure you leave below. And if you haven't subscribed, don't hesitate to do that. And if you like my video, just make sure you give me a like. Till we meet again on next video. Bye bye.